Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at ODFL, or Old Dominion Freight Line Inc. ODFL is an American regional, interregional, and national less than truckload shipping company. Here is the barchart.com technical opinion rating for ODFL. The bar chart rating is a 100% sell with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, the stock is in a bear trend on a monthly basis if the stock price is below the 10-period or 10-month simple moving average. The monthly chart shows that ODFL has been below the monthly moving average line for months, so the monthly trend in ODFL is down. Next, we're going to look at a daily chart. The stock is in a bear trend on a daily basis if the 50-period or 50-day exponential moving average is below the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been below the green line since December, so the daily trend in ODFL is down. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy puts if the stock price is below the lower Keltner channel line. Anywhere inside the Keltner channel or even above the Keltner channel is fine. ODFL is above the lower Keltner channel line, so ODFL is inside the buy zone, sell zone, inside the sell zone. Since the trend is down, we want to buy a put. ODFL has 5 option chains to choose from. We're going to use the May 16 chain. Right now, the May 16 options have 32 days to expiration. Here are the ODFL options that we'll be using, or this chart shows the ODFL options that we'll be using today. This is from the May 16 ODFL chain. ODFL closed at 152.23 on Friday. That means all of the puts on the list from 185 to 155 are in the money. Let's take a look at the profit potential for buying the 150 strike put, which is the closest strike to the current price of the stock. The bid-ask spread for the 150 put is 6 even to 12.90. We try to enter at the midpoint, so we'll use 6.45 as the buy price. Our put option calculator shows the profit potential for this put based on ODFL price changes at option expiration from flat to a 12.5% decrease in price. We can see that if the ODL stock price is flat at 152.23 at option expiration, the 150 put will lose 100% of its value. This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the put stock only has to move down 1% for the put option we purchase to break even and start profiting. Now let's take a look at buying the 165 strike put to see if it qualifies for the 1% rule. Here is the put option calculator picture for the 165 put. According to the 1% rule, we want the put to at least break even if the stock price is down 1%. The calculator picture shows that if the ODFL stock price is down 1%, the 165 put will lose 19.5% of its value. We want that to be break even or better, so the 165 put does not meet our requirements. Let's see if the 180 put will work. The bid-ask spread for the 180 put is 26.80 to 31. We try to enter at the midpoint, so we use 28.90 as the buy price. The 180 put works. If the ODFL stock price is down 1%, the 180 put will make a 1.4% or $39 profit. That's better than break even, so the 180 put is the one we'll buy. The put option purchase calculator also shows that if the ODFL stock price decreases by 2.5%, the 180 put will make a 9.3% or $268 profit. If the ODFL stock price decreases by 5%, the 180 put will make a 22.4% or $648 profit. If the ODFL stock price decreases by 7.5%, the 180 put will make a 35.6% or $1,029 profit. The minus 10% and minus 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the ODFL stock price does not make the expected move down and remains flat at expiration, the 180 put would only lose minus 3.9% or minus $113 compared to the minus 100% or minus $945 loss for the 150 put that we looked at earlier. Now we want to review a put option debit spread, aka a vertical put spread. For this spread, we want to buy to open the ODFL May 16 175 strike put and sell to open the ODFL May 16 165 strike put. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 175 put for $24.85 and sell the 165 put for $17.75. $24.85 minus $17.75 equals $7.10. So the entry price or debit cost for the spread is $710. The put option spread analysis calculator picture shows that the spread will make a 40.9% or $290 profit if the ODFL stock price increases by 7.5%, remains flat, or decreases in price when the options expire. Creating the debit spread will allow us to collect a $1,775 cash credit to our brokerage account for the sale of the 165 put. As we said on the previous slide, this reduces the cost of entering the spread to $710. Here's a note regarding earnings reports. The next ODFL earnings report is scheduled for April 23rd. Let's review the trades one more time. The first trade was a put purchase. It said to buy to open the ODFL May 16 180 strike put for $28.90. We also reviewed a spread. The spread said to buy to open the ODFL May 16 175 strike put and sell to open the May 16 165 strike put at a debit of $710. That's it for this week's Optioneering Workshop.